Hey guys, in this video we're going to be looking at some of the common journal entries you'll see, whether it's issuance of common stock or preferred stock, as well as dealing with the repurchase and then resale of treasury stock. So with that, let's go ahead and get started. In this first example, we issued 100 shares of common stock with $1 par for $20 per share, and so always the first step is to debit cash for the amount of cash you receive, which in this case will be $2,000, or the number of shares times the price per share. That will be the same for any type of issuance journal entry. The next thing I like to do is deal with the par value here. So you always credit common stock based on the amount of par times the number of shares. So in this case, it's $1 par value per share times 100 shares, so you're crediting common stock by 100. And then the very last step that I like to do is kind of plug to APIC. So to make my debits and credits equal, I know that I need an additional credit here, and so I'm going to credit the difference to this APIC account, which is short for additional paid-in capital. Okay, and now let's go ahead and look at this same exact example, but instead of issuing common stock, let's go ahead and cross that out, and instead let's issue 100 shares of preferred stock. So when you're approaching this example, you're going to essentially go through the exact same process, but instead of crediting an account called common stock, you're going to be crediting an account called preferred stock. So again, you're going to be debiting cash for the number of shares times the price per share, crediting preferred stock this time at the number of shares times the par value, and then you'll credit APIC, that additional paid-in capital account, with a plug to make your debits and credits equal. Okay, great. So these two examples are for issuance when you're given a par value, but let's go back to this original common stock and let's cross out par value and do the same question, except assume that these shares are issued without a par value. And in your journal entry, when you're debiting cash, again, you're always going to be debiting cash for the amount you receive. So in this case, again, it'll be the 100 shares times the $20 per share. But the difference in the journal entry is that instead of crediting common stock by the par times the number of shares, you're crediting common stock for everything, right? So you credit, in this case, $2,000 to match your debit, and you just don't have an APIC account. So those were the journal entries associated with issuance, but I also want to go ahead and talk about treasury stock. Now, treasury stock is a contra equity account or a contra stockholders equity account, and what it is essentially is it's stock that has been repurchased from investors. And this stock is considered issued but not outstanding. And okay, so it's a contra equity account, but like, Kelsey, what does that really mean? So remember that a contra account is related to another account and it has an opposite balance. So in this case, equity accounts always have a credit balance. And so for a contra equity account, it's going to have a debit balance that increases with debits and decreases with credits. So let's go ahead and look at what a journal entry on repurchase actually looks like. So in this question, we're going to go ahead and say that we purchased back let's say 10 shares at $10 per share. What your journal entry is going to look like is, first off, a debit to your treasury stock because it's going to increase with a debit for that 10 shares times $10 per share, or 100. And then you'll credit cash for 100, which is the amount that you actually paid out to receive this stock back. And now let's go ahead and look at what this looks like on the balance sheet. So assuming kind of from that very first initial entry we made for the issuance of common stock, let's say on our balance sheet we have common stock at 100 and an APIC account that has a balance of 1,900. So treasury stock again has the opposite balance of a normal equity account, and so this $100 balance in treasury stock is actually going to reduce your overall stockholders' equity, and that's because it's a contra equity account, right? And so it has the opposite balance of a regular equity account, and again, it's going to reduce stockholders' equity overall. So now let's go back and go ahead and look at what the resale of these treasury stocks would actually look like. So let's say that we're going to go ahead and resell 10 shares back to either the same investors or new investors, what have you. Let's say we're selling them back at $11 a share. So if we're selling them at 11, that's going to be greater than that initial repurchase of 10. And what we're going to want to go ahead and do here is, of course, we're going to be debiting cash by the amount of cash we receive. So that's going to be the $11 per share times 10 shares. And then we always want to go ahead and credit our treasury stock by the amount that we originally had repurchased it for. So we had repurchased it for $100, and so that's what we're going to credit that treasury stock to, is for that original purchase price amount. And then you'll notice here that our debits don't equal our credits, and so our credit difference is just going to be a plug to APIC. And you're crediting APIC when the amount you resell it for is greater than the amount that you originally repurchased it for. So of course, I know you're wondering, well, Kelsey, what am I going to do when I'm reselling my shares back for less than I originally repurchased them for? So let's go ahead and look at that kind of example. So let's say we resell 10 shares at instead $9 per share. And so this $9 that we're selling it for is less than the $10 per share that we had originally repurchased it for. But again, we're always going to be debiting cash for the amount we receive, which is the number of shares times that $9 price per share. And then just like the last journal entry, we're always crediting our treasury stock by that original purchase price of $10 per share. And in this case, we resold all 10 shares. So we're crediting treasury stock by that $100 original purchase price. Again, our debits don't equal our credits, but in this scenario, we need a $10 debit to make our journal entry balance. So we're going to be debiting APIC by that $10 difference as a plug. So hopefully with these two different journal entries, you can see the difference on when you're debiting APIC versus when you're crediting APIC for the resale of treasury stock. Hopefully overall this video is helpful. Thanks for watching.